So when we had this much data right here, right? Now there's a couple of principles at play. One is that just from a candlestick pattern perspective, right? We are, this day closed right above these last 2 days. And it had a slight sell-off, but that's basically the bulls were in control on this day, right? It wasn't like an amazingly strong day or anything, but it's like, okay, that's something noted, right? But if we zoom out, we can see here, right, that we're hitting a trend line, right? Where anytime we kind of popped back up into this trend line, right, we had a problem area. So we just know, just if we just look at this from a daily perspective, like buying right now, right, on a daily, from a daily chart perspective, is very high risk. Now, at the same time, it's like, well, am I super excited to go short here and change my bias? My larger time frame bias at this point is neutral at this much data. Okay. Now, obviously, this intraday bias was up, right? My larger time frame bias is neutral, right? Because, right, the short term is neutral bullish. We're up, but we're not up too much more than this. The intermediate term is up, right? We had a strong V reversal off the bottom of this, right? And the bigger picture is down. We just look at this trend line. So if we take all those three time frames that I just mentioned, the short, the intermediate, and the big picture, right? That combined, they're all different. So they're not aligned. So that at this point in time, I'm uncertain as to who, like where the bias is. So it's like your longs don't get an extra weight and your shorts don't get an extra weight on your matrix, on any of your setups. So, right. But then when we get when we get this new data point, bam, right? We had a huge trend breakout on strong conviction, right? A very strong bar, right? A bar that looks similar to this, where there was, right, sideways up chop follow through, right? To this level. So, just look at other days when we had this level of strength, right? Look what happens. Follow through. Like, look at this.
Look at this.
But also, right, when we broke out of this with conviction, right, there's, if you just look at this much data from here to here, there's blue sky, right? We have to go all the way over here, right, without any reaction, and it took out, right, I don't know how many days here, right? All this, all these days, all this, and then just like at this point, your larger time frame bias based on the magnitude of the move is shifting. It's not just like time spent at price. It's like you have a multi-week balance breakdown and it shifts. Like sometimes it's just the strength of the move. But at the same time, given the strength of the move, I'm hesitant to make an up call because I don't want people on the lower time frame buying every single momentum breakout. Because you can see, let's just real quick go to the smaller time frames. Well, maybe this wasn't the best day, but on a day like the day before, right? Any up call up into this resistance zone is usually just kind of, so it's always safer to go with a sideways up in that sense. But this is just one of those days, right, where the up call made sense because there was no sideways up entry, right? I mean, this just literally just took off, but it took off with such strength. It's like, well, you can't buy here when it's up into this zone. Now, if you caught this as it was moving out, you could buy a breakout. These are basically if you made a non-directional or you were planning to set up a fade setup, right? These are momentum based setups. But these happen so fast, guys. Like I'm watching this. This is what I do full time, and I didn't catch it. Like I couldn't buy this breaking out. I'm like, screw that. But the momentum was strong. Was that I patiently just put in a fib ratio, waited till it got to 0.382, and I bought it right on the nose right around here when it was pulling back, right? With the context that this is my next resistance zone on a larger time frame, so I'm going to take profits at 2904. I'm going to take half off, and that's what happened. If you go on the 5 minute, you had this breakout bar happen very quickly. So I was like, okay, well, I'm going to use the pullback continuation setup. The pullback continuation setup has to have recency bias of the momentum. So like this was the breakout bar, then the pullback. And the only reason I can buy a PC setup because I have sustained momentum on my side because it's recent, right? And I have, okay enough trade location. You're not buying up here. I'm not buying a breakout. It's the pullback. But more importantly is that the larger time frame bias is now bullish because we broke all this structure. We popped up into this. It's very unlikely at the very least this thing is just going to reverse tomorrow, right? That's what it's like. This is broken quite a bit. Now, I anticipated that we were going to have problems up here, right? That's why, okay, great. That was a quick whatever, 1% or whatever it was. And then because I was getting ready to go to bed, part of me was like, oh, I have my bot automatically move my stop to break even. And then my voice said, well, Matt, you know your rule. If it doesn't invalidate your trade, you can't move your stop to break even. Even if your bot does it, I have to go in and do it. And I was just like, you know what? Screw it. I don't feel like doing it. I don't know. I just wanted to go to bed. And I regret it too, because what happened is I got stopped out. And any pullback to the VWAP, if you miss this entry, you have recency bias. Anytime, right? Now, as time goes on, you're losing the momentum of the pullback continuation setup, which is a hybrid setup. Just go back to that. Right? I'd much rather catch a trend day, right? When I gave this signal, I said, hey, when this goes back to this blue zone the other day, buy that, right? I explained why. It was a larger time frame zone, and then it breaks out into the trend. These are trickier for me. There's a little bit of an excitement. These are calm. I'm like surprised when the trend happens. I'm like, oh, great. Then I just extend my targets, move my runner to 30,000, whatever. And but the thing is here, right, is that you have to be this is something you have to be actively ready for. This is not something you can just set it and go to bed. Like you can put an automatic. You could have took that signal, use my rule where you either buy middle to the back of the zone. If it's a great zone, if you were feeling aggressive, depending on how you manage your risk, you could have bought at the top of the zone. But still, you would have been filled either way because your stop has to be beyond the zone, even if you bought at the very top of the zone, which would be correct too, because it's this low of the day. But there was another reason why I included the bottom of the zone. But just going back to this setup requires a different kind of, it requires excitement. And then I have to calm my excitement down and then get patient to catch that, which I did. You don't want to catch it here and then see this and get psyched out. It's like you want to really catch it when it goes back to the VWAP. You have to really be actively ready for it, going to market. Now, what's easier, but you don't have the advantage of the momentum, is like once you see the pullback, just put it where my orange dots are on the VWAP. Oops. So it's like you missed it. Fine, I don't have to use the market structure. I'll put it on the VWAP. So that's what happened. I caught that, made a percent, but missed the real leg up. Now the thing is that this was also an entry here. It makes it harder when you have to take pullback continuation setups when the time, right? Now I don't have the momentum bias now. I have, what I have is, see, I don't have sustained momentum. See, this has sustained momentum and the pullback. You get it. At this point in time, you don't really have, you have the intraday bias on your side for sure, right? You would not have the intraday bias on your side if you bought at the low of the day. It's pretty much at that point in time, it's either neutral or bearish. That's a fade setup. But at this point in time, the intraday bias is bullish. You have that. Now, what could have psyched you out from buying at this, which was a higher risk zone? I posted the chart, but I didn't say what, is that there was this double top here. If you go on the hourly, right, it doesn't look as bad, but if you were on a smaller time frame, right, you would have seen the double top. Now, what would help you, right, is like wait to the VWAP and just think about the worst that can happen. You take a small loss because you know it has to be a volatility stop beyond the VWAP, and you'd like, beyond this VWAP. You don't have to make it beyond this low of the day because it's like this is a pullback continuation setup without the advantage of the momentum, but you do have continuation, the sustained. You do have the bias on your side as well. You did have the bias on your side as well, but you also have the momentum. But you could see, right, if you zoomed out, you would realize that does that little 15-minute double top outweigh this giant, larger time frame bias? I don't think it does. So any pullback to the VWAP is an entry, but then the thing is like, well, you just don't know how far this thing can go. You can see it's like when we start trending, then the rule is even though I have these zones marks, I don't fade these key reference zones when we're trending. I fade key reference zones when we're non-trending. And a sideways up call is basically like, hey, we think we're going to trend, but we're going to use a fade setup to get in. That's all fine and dandy on a day like this when we got in. But, once you see this, it's like, oh, you have to shift your, either just stay out, because, if you put the low of day in here, you're just not going to get filled when we have this type of momentum. But if you are impatient, you're going to end up doing something like this. Let's just say you went on a, you buy as it, maybe you can't take it anymore and you buy up here, then you have to sit through this and you can't take it, and then you get stopped out and then it moves. It's like, well, then if you can't cultivate that patience, then don't take these hybrid momentum pullback continuation setups, which are harder to talk about in the chat because it's like I can give a heads up or a signal or a limit order on a fade setup. Like, hey guys, anytime we go back to this blue zone, right, it's a fair game, right? Because we have the low of the day, we have confluence of this as a major zone. I already talked about why this zone was on a larger time frame. But yeah, when this happened and I got stopped out, I was like, okay, so what did I do? I went to my trade journal and I released the energy of the mistake, because I will tell you this right now, my probability mindset would know that the right thing to do is only move your stop. I even showed you guys in that subliminals I sent you. You only move your stop to break even, right? At 2 to 1, right? That's mechanical. But at the same time, if we're in a situation where you would buy again, if it went down there again, why would you move your stop to break even prematurely? It's just, I do that a lot, and then it forces me to execute again. And it's like this, it's, you know what it is? It's like, you know how good it feels when you get 2 to 1 and you take half off? It's like, oh shit, my stop's to break even. I can go do something else. I can go whatever, take the kids out, whatever, take the dog out. It's like, but it's not correct process. But the thing is that we make mistakes, even though we understand the system. I'm voluntarily giving all the rules. I write them out, the system. It's simply because it's the survival mindset. The biology will override, right? The impulses will override fight or flight internally what's going on, right? So like, especially what Corby was talking about yesterday, it takes a lot more than just shutting them out and keep going. Because that's when you overtrade and you're like, why did I take 3 revenge trades today? It's like, well, just because you took a loss doesn't mean you have to get it back today. Keep that in mind. You know what I mean? Like, you don't need to take 2 more trades to get it back when you already lost. It's like, just let it go. It's because of that biohack mindset. So it's like, anytime this stuff happens, it's like, I really get internal, like, oh, I can really have the privacy to get internal. Oh, this emotion will creep up if I don't. Okay, so how am I going to override this? It's like, well, I went back to that performance routine I've been doing every morning to get more prepped up. It's like, okay, well, I just go back to square one, and you guys can mimic that and make it your own or whatever. It's like, it just gets you in a really positive, energetic, feel good state. It's like the better you feel vibrationally, it's just like you're just going to execute better. You're just going to be patient and be okay with whatever. Like the other day, I think I put an order in, it missed it by a few ticks or whatever, and I was just like, I'm not going to break process. That's okay. You know what I mean? It's just, I have an abundance mindset. And then if I did take a pullback continuation at that time, which wasn't the right time, because I said, hey, one of the rules for PC setups is we don't take it near a major zone. I had that marked as a major zone and it would have stopped me out. It's like, well, I was okay with missing it, even though that rule might not have worked that time. But I know over that probability mindset that that's going to work. And that's what's so hard to do. It's just to execute these counterintuitive things. When you're in that survival mindset, when you got real money on the line. So it's like, I know I was taking class B setups. So one of the things I was doing to take these PC setups, which I don't even want to even publish in the channel, because it's like, well, if you didn't hold a runner in from, one of the, I was like, okay, what was my series of mistakes? It's like, well, I could say I cashed out of my runner on this day at the end of the day, just because I a little bit more intraday than Corby. So it's like, okay, let me get out. But then that makes me stay like, okay, maybe I got to stay up a little later to catch this on the next day, where it's like, well, if I was okay with letting that runner go back, maybe a different styles, I'm just going to blast this runner up. So maybe it depends on where you're at, how much time you have, and what different people need to work on or whatever. It's like sometimes letting that last little quarter run for me is hard, because I have that day trader mindset where it's like, I know I can get back in, but then it creates this other stress where it's like, boom, broke out. It's like forcing me to take a PC setup instead of holding this runner through it. And then I had to take these pullback. It's like, these aren't as great. These aren't as high probability trades because we're higher legs up, and they require that hybrid mindset of momentum plus location, which is, it's not easy intraday when you're doing it. You will find that every time you want to fade at the right time, you will say, oh, this is when it looks more, say you're buying the pullback, this is when it looks most scary, right? Correct process would be on a PC setup to the VWAP would be to buy right here. Like as soon as it hits there, just go right to market, right? Or even have a limit order slightly above the orange dot. What happens is that if we went on a smaller time frame, you're buying as you see the green pop up. We all do this sometimes, and it's like, don't wait for confirmation. That's different than if you have let's just say, that's when I say don't wait for confirmation on that. That's different than when I say, like on this day when I said, hey, fair game if this goes back to the low a day at this blue zone. Then when I had this much data, I said, well, this was at 5 a.m. I just didn't take this on first test. I was like, well, this is a nice classic sideways double bottom, blah blah blah. You know what I mean? So it's like, if you don't like using zones, I like using zones. We all use our own style psychologically just to help us do the right thing. Then you could just take this candlestick and just put it in halfway. But I said, the variance of this is a little bit too whatever. It's hard for me to just think in levels or just whatever. So it's like, I just go back and I look for confluence and I build these zones. And that, and the top one is really just that low a day. But if we went back at this zone, just go back out. It's just this was a really inflection point, right? We came back up here, touched here, broke all the way down. Look, touched here, broke up, and this gap broke, but then it acted as support, broke up again. So it was an inflection point, and then it launched. So it's like, wow, that is something that is an interesting touch point in addition to this low day, which was a touch point, and this pullback here, which launched us up here. So that was a good entry there. That was a good entry there. So the rule, right, just for execution, right? If you see a zone and you want to do your own zones or take a zone idea or whatever, zone fades are my favorite setups. It's just something about knowing that, okay, I'm super patient, right? Yeah, if this comes back down here, I'm gonna buy, and I put that in and I walk away. So that is easier for me to execute on, just because I just don't like having a crazy heartbeat when I'm pressing buttons. Because one of the things that happens, and this has happened quite a bit, I forgot to tell you guys this, is that when I'm doing these pullback continuation setups with the trading bot, especially when momentum gets crazy, I don't know what it is, and I'm trying to get better. It's like so I get a slight delay. It annoys me. And so I knew coming in, I was like, when I was waiting for this patiently for this pullback, I was like, last time I did a momentum pullback trade, I couldn't move. I couldn't because I just like got in with a template quick to get into the market. And that implies that as soon as I do that, I have to go to edit real quick and actually put in my real stop. See how it's like a little bit more scrambled just because like, momentum happened so fast. Maybe I wasn't prepared, but with these limit order fade setups, like the other day, yesterday, it's like, well, I have a lot that took hours to fill. The tricky one with those is like once you put it in, let it go. And then if you're watching it come down and you cancel it, don't do it. Just let it go. There's certain rules where it's like if it wasn't, if it tests a weak zone and the bias is down multiple times and you're going against it, it's like, well, you already reacted from it. Don't get it again. You're only getting it for a tradable reaction. But the one below it, that was a larger zone. We could have got a bigger move off of it. I was sideways to sideways up more on my skew on that day anyway than sideways or sideways down. But when we did this, right, it's like I went to market and then I kept trying to edit the button. It wouldn't let me in. I was like, oh, so it's like I had to time it. I had to be patient. I knew it was better this time than the last momentum setup I took, but I still had to time it where finally I was like, okay, I got in and changed the stop. But it was like, yeah, if there was a flash crash, I was totally exposed at a lower level than I should have been because it was a stop that I needed to adjust, but I just didn't have time. So it's like, yeah. But the thing is that if you where would you get a 4-star trade on that matrix? Well, when the larger time frame's up, like it's been, or then we get some type of giant balance, then we get a giant momentum breakout. Let's just say like off the open, kind of all this, and then right the pullback, right? Then you get good location, and the larger time frame's up, and you get the location, and the intraday bias is up, and you have sustained momentum. So I had it like when I basically criticized the 4 things I did wrong today on this. Basically, when I entered here in the room, and I couldn't give it a signal because it happened too fast, but I showed you the entry to wait for patience. It's wait for patience. But then it's like that perfectionism cousin, and you just want to go to bed, and like, bam, stopped out. And then it's like, I'm not really up, but I, get it, or I'm like, yeah, whatever. But it's like, that's when you need to get it again. Then you're forced to get it at a higher level where it's like, you do see this double top, but at least you saw the skew. You just had to think about the larger time frame bias to get that. Because it did look, you know what I mean? Like maybe this thing's overdone, but you just had to say to yourself, is this really unlikely to reverse to a steep level? And when there's so much bias on the side. Another thing you can do if the bias is so strong in a larger time frame is just use a fib ratio. So at least even if you bought here and you didn't wait for the VWAP, don't have such a tight stop where you put it like a few ticks below. Like give it room, you know what I mean? And then this is also half from the breakout bar. Just keep in mind, it's like when things get overextended, it's like, this idea may fail. You know what I mean? And that's why it was harder to get than just maybe holding a runner, or what I thought was the easiest one is that taking the recency of the momentum, right? Yeah, I didn't know it was
Question.
Yep, go ahead, go for it.
When you say the bias is strong, can you just clarify what you're looking at when you say the bias is strong here?
Yeah.
Because is it just because it was a strong run up, or?
Well, there's 2 biases I'm looking at. One is like this larger time frame bias, right? Which is like, when we were here, the larger time frame bias was essentially neutral because like, intermediate term, the last couple weeks or 7 days plus the strength of this was up. The short term was like the last couple of days or whatever, but it was sort of maybe even neutral bullish because it closed a little bit. But then big picture was down. So when all those different this time frames, when I'm looking at those things, I'm thinking, oh, these aren't aligned. So it's not necessarily super clear, whereas let's say I had this much data for at this point in time, right? The short intermediate term was down, right? But is the big picture, right? Short intermediate term, the big picture is down, but there's even a bigger time frame, right? Where it's at a potential time frame here, zooming out, the bottom of this even bigger pattern, which trumps this downtrend pattern just from a size and time perspective, where it's like, I don't know if it's going to hold, but if it does hold, that's an interesting spot where that could reverse the time frame. So my larger time frame bias, it's not like I am Nostradamus and know that this is going to work out. And it's always psychologically very hard to be the guy that's like, hey, because I'll tell you on this day, I wanted sideways up for my call, but it's like, it's so hard for me to go in where I was like, okay, at the very least, I'm neutral at this point in time, where it's like, okay, I don't know who's in control in terms of the bias here. We're not sure, right? But it's like, then you get that reaction off of it, right? Like, okay, right? This thing's starting to turn where it's like, okay, right? This is not a bullish engulfing pattern, but it's a piercing pattern. It's like, okay, at the very least, I think it has good odds to at least touch these moving averages, maybe touch the top of this trend line. And that's what it did, because we entered here. We also entered on this pullback. And then when we were here, it's a little harder because now my larger time frame, right, shifted bullish, bullish, bullish. Up here, it's like neutral, bullish, now and even neutral. It's like, okay, well, this could potentially reverse here. Like, the one thing that the Bulls had going for it was that this was how many, remember, the more leg counts you're down, the more exhausted you could be. So it's like, at the very least, I thought, at this point in time, it had way better odds to turn down, right? At this point in time, way better odds, right? The more leg counts you get down. Now that this thing is mature, and this is a different category, but we can just think contextually. It's mature enough with 5 leg counts down, right? Where Corby even says, hey, this could be sideways, even sideways up now, right? And now you're at this super zone that I marked here, this larger time frame zone. This could shift the bias. So, but then when we get this, right, intraday, so there's that amalgamation of those 3 time frames that creates a larger time frame bias on that matrix. And then there's the intraday bias, and that's simply like, the intraday bias today's up. It's up 6.5% or whatever. Giant candlesticks, big pace. And then this is those trend days, but this isn't that pure trend day where it like takes off at the open and then just like goes higher highs, higher lows, and then just, this is like up, fake out, sideways down distribution, up, trending, now we're going to distribute. So this is like that double distribution trend day. Oops. And that's where those day types can come in, where you could think like, okay, well, this could break out here, right? And this day the bias is up too, and it was up off this open, right off the open, right? The intraday bias is up, and we know from just doing a top-down analysis, our larger time frame bias would also be up because we had the magnitude of this move broke all this structure. So we essentially have like, the trend line breakout. You could even think of this as a balance, right? Where we just broke all of this structure on such strength where we barely had any pullback, where it's like this, sideways up to up, right? Our larger time frame bias is up. But then we get new data, right? And we have tools and we have our own risk tolerance. Thomas says also got stopped out close before Pepe made 40% today, but also bought spot. Yeah. Well, at least you got that 40% on Pepe, right? So, right? So once you have this, right, and you were thinking about, okay, let's say you come back to the screen and I'll get rid of this fib ratio because we just know it went to the half. Let's get rid of this box here too. You come back and you see this. You're like, just calm down, right? You know the market moves in a series of thrusts and corrections. If the larger time frame bias wasn't up, this would almost be a short setup. Look at the before this turn, how many times this thing moved up and we were shorting this, or we were getting out and was reversing. But because the larger time frame bias is up and we're sideways, our trade plan's up, we're already prepped for this. Now, this happens so fast where it's like, let's just go on a 5-minute. It's like this thing went up a lot the day before, and now it's just chopping around, and it just blasted out of nowhere. And this vertical volume bar is abnormally large relative to all this, right? And we know the larger time frame bias is up. So we have to calm down, because even though all that's true, it's still incorrect process to just buy up here, because the trade location is so bad. And we know that trade location is the most powerful category out of all our edges. So that's the only category on that matrix that you can take that has a 1-star trade. If the trade location is that good, you can take a 1-star trade. Now there's weights to them, and you can think of which is extreme. Like this, right? This is sustained momentum. You have that. So let's just say you wanted to, you know you're going to buy. You calm down. You say, okay, I got to wait for a pullback. Right? The sustained momentum's on my side. The intraday bias is on my side. The larger time frame bias is on my side. So I have 3 stars. I just have to wait for a good enough trade location on the pullback to get in. Because you really don't want to be buying up here and then watching this, because this is, I know this looks small on this chart, but this is like a percent or so. Like this is you're trading on full size. You don't want to watch your trade idea go down. Like this would be a stop out almost 1.5%, 1% or whatever. This is pretty volatile. Let me just expand it. So you wait for the first pullback to the VWAP, right? You know that you have to get on board this, right? So it wasn't. I even in lieu of the VWAP, right? Because the momentum was so strong, the VWAP's right there. If you just put this mechanically, you're not getting in. You draw the fib ratio, it gets you to a fib ratio, and then you buy as it's pulling back to a fib ratio to market. And I had that as the target after I got in, or I can't remember how I executed it, if I changed it before or after, but 300 points, whatever, back of the zone at least, not the top. But this was a good exit, but just because the day before was so strong, why can't this just drift around and chop and then take off, right? Because it's a sideways, it looks like it's a double distribution trend. Distribute, trend up, distribute, trend up, maybe triple distribute. And that's what happened. So, the odds were that we weren't going to get a low day retest. So you just had to get to that VWAP. Just realize that the edge of the momentum, the longer in time you go away for it, decreases. But you do get good trade location up here, because this was an intraday. I was taught before Kobe coached me a long time ago. This guy's a very good ES trader. And I was doing this for a while till I was almost getting carpal tunnel in my hand, where it's like he would put, this would be and I was doing this for a while. If you go back, he'd be like, okay, this is pre-market support or whatever, if it was just opening, and he would consider the odds. He'd draw zones for everything, because this is intraday. It's an intraday reference area, and I just would weight it, because I would just say, hey guys, this is weak. Because there might be someone that says, I don't take weeks, great trade location. Only good trade location, or only this setup, or only that setup. But what makes it okay is you have all those other things on your side, the intraday bias, you have the larger time frame bias and whatnot. So this was a decent odds trades for continuation, and yeah, it was. Now once you see this, it's like, yeah, don't be the hero and just find a zone and say, hey, you could have shorted this zone up. Yeah, you could have, but it's like, why step in front of these things when the bias is against you? It's very stressful to do so. Like, could you imagine if we know our bias is now turned, and you got to be the hero to step in front of a zone, and you see this extremist? Yeah, you can just see that. That's why I say trade location is the king. Now, if you do step in front of a trend, you have to at least have the contextual and say, hey, this is not going to probably reverse today. I'm just going in for a few, like a 1-to-1 or something, right? You're just getting in and out. And of course, broken resistance acted as support. As it pulled back into this zone, it acted as support, because everything's just trending, right? And that 100% fractal rule did not work at all. I mean, if you took a target based on that, that's conservative, but I apologize, because it went up more. That's why, don't go all out. But, the idea was that it has been very bullish, but things that could get overextended, right? We see that there has been sellers, some stepping in, but just getting overwhelmed. But this is almost like a bounce. So like 100% of that bounce was a target, but it just pulled back a little bit. And then we got the real leg, So, and then a final Class C something setup that I took. I don't post these just because if I don't get it ahead of time, it's like, it's not low enough risk for me. Because technically my trade plan was sideways up, where it's like, well, if I don't fade the low of the day, I don't get in. So technically every setup that I took today was a non-system trade, because I didn't make an up call ahead of time. But the idea is that I took this one here, right? Why I didn't take it up when it came up here, right? There was that, right? But it's like, at this point in time, you draw a fib ratio from the other time. This is not significant enough, and blue's a major zone, right? It's not at a fib ratio. It's not at a moving average. at the same time, right, you need good trade location or patience because it's overextended. But at the same time, I'm thinking to myself, well, if this pulls back to a decent level and it's only 12:45 p.m., I could scalp another something out of this. Like it's just if you just have the right action mindset, right, you could hold a core position, and you know that trend days usually end at the last end of the day. If you were lucky enough to like hold this and not to get stopped out because you moved your stop to break even or you bought a breakout or whatever, or you have a runner, you hold this. You can almost hold this just from a time based perspective, just walk away. Um, but you could see, Joe, had low odds to reverse when it got down to here. You had the squeeze between the two moving averages. You also had this fat such and such here down here. And, you know, it was just pretty much a scalp, blah, 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 out. And then once again, I'm super aggressive. And I probably made the same mistake again where it's like I had my stop, I think, below this swing. And part of me was like, Matt, just move your stop tighter. I wrote this in my journal, but I was like, yeah, it's not. I shouldn't even be in this trade. And I kept it at break even because the bot just does it automatically. And I got stopped out again. And then I was like, well, isn't that an entry, Matt? I'm like, yeah, it's a shitty entry, but I'm not taking it again. And I'm just like, I don't want to have a position on while I coach right now. So I'm done. I got what I got out of these days. But you could just see how there's difference. This is more of an intraday day trader type of thing. But you could see how one mistake compounds. How nice would it have been if I kept this, right? Kept my stop at the original and even said, Matt, I can tighten it up here. And then just woke up to these extended huge targets and then didn't have to scalp this to get, you know, whatever out of it. That would have been better. But there's no, at least right in an uncertain world, right? There's just, you just have to expect that there's going to be mistakes because this is the only game in the world where it's like, no matter how much you exert yourself, there's absolutely no 100%, at least I haven't seen, ability to be 100% perfect in all your ideas. It's just the only thing I'm trying to do, and it's still hard to do under pressure with real results. And I'm trading for an entity under contract performance, blah blah blah. I have to do something by September for them if they want to fund this thing. It's like, all right, guys, but you guys really aren't great traders, so let's be more realistic because it's like I don't know when I'm going to have a 10 or 20% day. So it's like they'll break it down. We're like, we need X% per week. It's like, well, guys, it doesn't work that way. Sometimes the market gives you, you can have your 1 or 2 months to make your whole year. I mean, it's like you don't know when the expectancies go. I didn't know it was going to break out like this today, but it's like, so why would I set that type of a target? I set targets like, okay, I follow that system, take the high quality trades, be patient, then I follow correct process. So what did I do really great today? My entries are always rock solid lately. I mean, this pullback was rock solid. I waited patiently for it, didn't buy up here. It's basically right now it's moving the stop too soon because the bot makes it nice and easy. Now the ES, I don't have that problem because I don't have a bot. I just have to do it manually. So it's like, okay, well now I can follow my rule better. When that bot moves to break even and that stress relief happens, a little thought always pops in where it's like, now you can relax. But it's like that. If I got to go down there, I'm supposed to buy again. Well, sometimes I just don't buy again. Right. So it's like just keep that in mind. So I think what I'm going to do is I'm going to program with that let winners run tape because it's a cool program because and I shared it in the channel. I'll do it again because it doesn't say like let your winners run mechanically this way. It's like, you know, you have to define what let your winners run for you based on the market context. And on a day like today, with so much bias on our side and large time frame bias, it's like, well, don't move that stop to break even because any pullback to the VWAP is an entry. So why would you move it there? Now let's just say by this time of day, if it came up here, yeah, or even up here, move your stop to break even, right? Because if this thing is going to trend and break out of this, I don't want to see this come all the way back down here. This would kind of invalidate. That's a conservative way to do it. That would have been correct process. That's the system that I know over a large sample size makes the most money. Challenging to do when the stakes are high, but not uh, not not doable. Definitely doable. Just check the chat if anyone has any questions. Yeah, did anybody take any trades in Bitcoin to catch any of these? These are some nice swings. What are people trading? Earl says he's trading XRP, Ripple. Now, when you trade such a volatile coin, are you like how do you approach your risk management? Is it something are you like just dollar cost averaging in with an amount you can afford to lose and it's more like a position type of a trade, like, or are you actually day trading with a large amount with really controlling your reward and risk with fixed percent risk model and the quad exit and all that? Nice. This is when I trade, I use the quad exit model. That's good. Yeah, there are some, I've been guilty of this before too, where it's like the investor mindset comes in on some profits, let's say in your trading account, and you just buy some coins and stake them, and it's like, well, there's no stop loss there. I mean, I've done that too. There you go. There you go. Well, all right. Well, if that no more questions on Bitcoin, I can go to the ES real quick, which is what I originally started out on. Yeah, so yeah, the ES also has been extremely, this is right. We've had a larger time frame bounce breakout pattern, right? And our larger time frame, right? Really high probability setups would be, after the bounce breakout, any pullback after the first leg, right? Super, good trade location, bias, larger time frame bias, bigger picture pattern on your side. So, and then it's like intraday with the ES, it's like I can see what those market internals are doing. And it's just going to give me a second source of edge because I can read them pretty well. And right, so it's like large time frame buys up, 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 right, taking sideways up categories, not taking shorts until right we get to. And I'm always a little more conservative. I just cloned this. This is a range. We broke from it. So okay, well about 100% of the range extensions right here. That's when we had this doji. So I was like, okay, that's right. We're 100% of the range. No need for greed. I mean, we could go up to this. We eventually might get to this major swing high, right? This major swing high in this big picture downtrend. It's just huge leg down, right? This is a major key reference area, right? So eventually, right? And like I said, it's not an exact science, 100%, just an idea. This is definitely a good place to take profits. We did get there. Now, uh, if when you get up here, your larger time frame bias is neutral, right? So if you shorted this pop into here, and this isn't a great example because I would never have a zone this wide on the execution time frame. I just visually showed this for the daily. But there'd be a smaller zone, right? Let's just say, something like this on a smaller time frame. We'd zone it down. But it's like the idea is that you put a short in there and you have good trade location, and at least the larger time frame bias isn't against you. But it's also okay to realize this is a profit taking zone and go with this strength, right? But it's a strong enough major zone where you actually you can easily step in front of that. It's hard to do, right? But not impossible. And then there's also this pullback continue. Are we going to have a pullback continuation pattern, or is this zone strong enough where now this whole breakout pattern might fail? We can come back and test this spot, which would be an awesome buy area. But if you draw a fib ratio, and clearly the short-term bias has been down the last 3 days. So, but even if you are on the long, even if you're going long against it, if you use some of these tactics of this, like with this fib ratio, let's go here, right? The first idea is I had this low day as a zone, and we had this V, possibly sideways dip go pattern for a pullback continuation, right? So because this is the first mediocre zone, it's like we'll go to the back of the zone, right? So got filled at the back of the zone. You're at a weak area. I got out for a quick pop and just got immediately stopped out. It was super heavy. I was almost going to write the channels I was watching it. Heavy here. Don't go long if you've seen that zone. Right. But in my mind, I'm already saying, okay, well, that's an independent idea. That's done with. What's the next? If I didn't take that trade, and I was completely non-emotional about whatever, la la la. What's the market telling me now? Like completely get up, neutralize yourself, right? Well, here's a key swing low, but the markets are always so complicated. I don't want to be a decreasing and always like, oh, there's a decreasing low, put it in. But that's fine if you did that. That's a reference area. I just saw this launching point of conviction on a larger time frame, and it was near enough for this. So this whole area, depending on how it moved here, right, was enough for me. And then when it penetrated the zone, that's an entry, right? You have multiple times to get in, middle to the back of the zone. And I was giving kind of updates where I said bullish divergence, da 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 da. And the blue zones are always zones that I'm going on. And it was hard to get in on that because this thing broke down. So if you had this low day idea and this VI sideways idea and this wasn't managed, you either took a loss breaking or whatever. So it's like psychologically though, if it was completely independent, you also should get in here with the idea that yeah, the intraday bias is against me at this point in time. But it's bottom building, and I just imagined to myself, it's like if I was short right now, is this really going to trend down again? I looked at the internals and they looked not that bad. Like I didn't when I want to see like another leg down in a major zone, it's like I want to see downtrending internals. Like I don't have that luxury for Bitcoin to read that price, but just like know that like just the buying tails alone, like that's not really looking that great. The first tail alone. Now, what you don't want to do is see this tail and then jump in above the zone. Just have patience. Be like, okay, I'm gonna get the classic double bottom, and it's at this zone. Not only is it this low at the low extreme of day, it's at Matt's low zone. You know the rule. You put it about halfway in. You get filled beyond the zone, get a volatility stop beyond the zone. You know the rule it has to be less than 2%. I'm averaging less than 1%. And then you have the idea this is a tradable reaction, not a reversal, because the intraday bias is so against you. And even though there's this pullback continuation pattern, the short-term bias is down. And we know that, right, the market could be overextended at this zone. So it's like the larger time frame bias, right, is becoming more, right, neutral. Right? But as we pull back into these key fib zones, right, there's still going to be buyers that are thinking for a pullback continuation. And at least that has good trade implication where it's like you got a tradable reaction on this. Half off to the VWAP and then up there for the next reference area. Now, any retest right after this, right, poses a higher risk, namely because we got a tradable reaction already out of that and it bounced here. But this is now a new low of the day. There is more structure. I can now look underneath the hood, and I might be interested in buying here on a trade, but I'm not going to execute now. But I just want to take a look underneath the hood. Well, what's going on underneath the hood right now? Well, it's like, well, oh, just to go back real quick, another thing that was giving me an edge at this time was as this was bottom building, right? Price was trying to make new lows. This was at 11:15. Let me just check the chat. Yep, take care, Kevin. So you can see, and this is why this zone what is more exciting for me to buy than this new wider pattern or whatever. It's because there was short-term bottom building, but as this was making new lows on the day, problem, can't go lower. There was responsive buying, and look, the 80 line was making new highs. Like that's not saying we're going to go down again. Simply thinking about what the other side's doing could be like, okay, I can get a tradable reaction and make some money out of it. Some trade, and then this wasn't super skewed to one side. It was kind of back and forth. In fact, the bulls were printing 873. That's pretty strong, up to over 1,000. Bears got it down close to that level. So, it wasn't at least when the market opened. Now, the overnight session, clearly the Bears won. But the regular trading hour, when this opened at 9:30 Eastern, and I got this data, I was like, well, I don't think the Bears are. This is actually kind of neutral. Look, blah 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 blah, and boom. So if you bought here, you have excellent trade location. You don't have the intraday bias on your side now because it's down now, or at least neutral here, so it's not on your side. Sustained momentum is not on your side, but it's not against you. So you have trade location, and the larger time frame bias, you could argue, could be on your side. Remember, we're at a zone now where the larger time frame bias now is neutral because we've pulled back enough, right? I would get bullish again, right? Like outright bullish instead of neutral bullish or neutral. Like if we got to this key reference area, this bounce breakout area, right? At this point, then that trend would be down and this bigger trend could resume. But, being the hero and catching this is tough. I'm basically just using market structure. The last little leg up would be at the 0.618 would be a lot better than the half because then we'd be at the tip of these tails for this leg up. and we'd have one more slot down. So it's not incorrect to buy here. It's not incorrect to buy here, and you could have bought there. You could put a resting order there. But it's also okay to say, okay, I'm backing off now, and I'm going to let this play out. I'm not going to get overly aggressive. That's why, I'm okay with getting what I got out of this day, and not getting aggressive and buying in. I actually lost track of the time. Plus, I don't really trade the ES when it's about to close. It's 5 o'clock now practically, so not good to me. I like to be out of the market maybe like 30 minutes before it closes. And that's what's cool about the ES too. It's like at least on the weekends it closes, so there's a breather. It gives me way less FOMO than Bitcoin because I hate when the moves happen. Let's just say I want to do something on the weekend. It's like, oh man, that's when the leg happens. And it does give you this ability to look under the hood, which I find it helps you with the zone fades because you could say, okay, what's the price really doing? Is there something hidden? If I faded the high of the day and caught this leg down and I was considering whether to go out or scale or hold it through that, and I saw this continually making higher highs, even though price is making lower lows, the rest of the market is actually trading at a higher price. So what that really means underneath the hood is that only a few major companies like maybe Apple or Google, right, are bringing the market down, but all the other 500 stocks or this is the NYSE, the thousands of other stocks are actually trading above yesterday's close. So that's like, okay, this thing's going to reverse or give us something out of it. So yeah, that's the story for the ES for today, guys, and that's the story for Bitcoin. So yeah, that's pretty much the market context I wanted to give for today for that. But so I'll turn the floor over to you if you guys have any questions. Last call for alcohol.
So, and a great buy you did.
Oh yeah, thank you. Yeah. Yeah. Yeah, we're gonna keep at it, and it's who knows, guys. Maybe there's a bull run on. Like I should put a poll in the room, and see what's going on. I mean, I like to see a lot of this in the green on these big levels here, especially KDA, which it went up to $28. I mean, come on now. You guys remember when KDA went up to $28? It's at 66 cents.
No.
Like yeah, we gotta let's go to that chart real quick. I bought a lot of this coin. Yeah, it went up to it doesn't go back in time far enough, this chart, but its highs were $28 because my brother bought it $1 and wouldn't sell when I told him to sell at 24, and he's still holding it today. He bought it $1 and watched it go to 28, and I think he put like $5,000 on it. So I don't know what to say. I called him and told him I don't know what to do. I feel bad. I couldn't have done more. I don't know what to do, but you know what happens
Not
when
your fault.
when you go in the chat rooms and you read about why it should be at $256 an XYZ event and what this programmer dev is and who's involved with Microsoft now with KDA, like my brother was doing. He becomes an expert, and I just don't know what I'm doing. So, but we all make mistakes. I mean, this coin right here. This was at 6 cents. This was at. I bought a lot of this one as well. This allegedly is a GDPR compliant United Nations, blah, blah, blah. But look at this. This was at 90 cents. I mean, this is an allocation time, I think, for some of these that are going to survive. Now, I don't know which ones are going to survive. I try to pick the best ones for my long-term portfolio. All of these are pretty much anything here on I can stake. The Ripple. I'm sorry, that's not the Ripple. That's Proton. I bought a lot of that one too, unfortunately. Ren, Matic, and those are a lot of these are Tika's pick. Curve has held up okay, I gotta say, compared to other alts. I guess maybe well, maybe not. That's how I haven't. You see, I try not to look at some of these, but this just goes to show. It's like if I was following my own plan, I wouldn't have bought so many of these coins that other experts said. What sold me on the 5 coins to was it not 5 coins to 5 million? I bought those too. But what sold me on the catch-up coins, he said each one of these coins is like, if you miss Bitcoin at cents, this is the opportunity. Man, he had these whole, it sounded so slick. The document sounded so slick. I was like, man. Ren virtual reality, curve with the exchange. I mean, thank God I didn't buy his FTX recommendation. That was awful. But that's why it's like, you know what? Use principles, grow your wealth with good risk management in play, and don't get caught up in the hype. It's like, and if you are going to play those games, take profit. I told him, quad exit that guy. You just, I mean, 1 to 28 is letting your winners run. My God, brother. I mean, Dot had some good runs too. Let's not forget Dot here. I mean, look at this run it had. This is reload central for these. I'm also staking this. I think, you know, if the programmers of Ethereum got involved in this one, I mean, maybe Dot might do something too. I don't have any more, but I made a lot of money on Dot's testnet KSM because it was even more volatile. This one, you know, started off at like $1 and went to $56. KSM, I think started off at $1 and went to like $500 or $600. Let me show you that one. But as far as trading, I just stick to Bitcoin and the ES. These are just things I like to stake and position trade. It's like I can't imagine going to. Also, some people use leverage and stuff, like 10x. I guess to me, I don't know. It's like I feel like you just get stopped out sooner than you would if you didn't. Yeah, but KDA is at 66 cents. My God. KSM at $23 and its highs. Oh my. Yeah. $625. My buddy made a fortune on that. That was one of my recommendations to him. But it's a, you know, it's a shame because it's like if you can get caught up in the fundamentals and we're not fundamental traders, it will affect you because it's like you start to know the devs and you start to appreciate what the project is. But guys, it's like all this, it's only valuable, you know, based on if people believe it. And, you know, for what it's worth, I think a lot of these are Ponzi schemes. You know, it's not valuable unless people believe it anyway. So use your trades, use your trading principles, and quad it out and stay out of the hype channels. That's my 2 cents for the long-term position game. But yeah, gents, that's it for today. Hopefully you guys got something out of that, and I'll see you guys in the room.